Yo, what's good, guys? Back with the video. Crazy day. Um, if you were in the market, you saw it. We sold off pretty hard and then made a huge comeback and ended the day positive. So, uh, if you don't know, we have the FOMC meeting tomorrow, and that always causes some big moves, a lot of volatility. So, let's hop into the charts and see what we see. So, I have a couple things we're gonna go over. We're gonna look at the 10-year yield. We're gonna take a look at that pitchfork I showed in that last video, and then look at some levels, some trend lines, some big resistances, and last video, I talked about how in January, that January drop, we went under a level and stopped in between the level below that, kind of is like a bear trap, and I mentioned that yesterday in my video. It was Saturday, Sunday, whatever day that was. I mentioned that was kind of what it looks like, and that maybe we don't go to that next target, we go under the second target, but not all the way down to the next. So that was a pretty big thing that I caught. Yeah, let's just look at the charts. So to start it off, this trend line. This is a pretty big trend line. You can see we have these reactions here, and we've closed below it before. I guess this time there was a gap. Let's see if we can find anything else. I guess we had we had this gap that we had to fill. I don't know. Just looking for something, but the main thing we're looking at is we are testing it right here. We got rejected off of it, and we're still underneath it, but the past few days have been really tricky. I've been calling for a pretty big drop, almost 2 weeks now, and I think we're getting really, really close to a bottom here, and it only makes sense to me if we turn around on that Fed meeting, which is tomorrow, and goes into Wednesday too, I believe. So yeah, I've been talking about selling off into FOMC. I did mention like this Morningstar reversal. Maybe we reverse and we go green into FOMC and then sell off, but that didn't happen. We went red, more red. So we're gonna analyze this a little more. So now that we have that trend line noted, we're gonna take a look at the specifically this area. So I've been having a lot of trouble deciding whether I want to count it like this or an ABC like this, which was this. So first we're just going to take a look at this 5-wave possibility. So if this is your wave 1, you retrace this. We stopped at that 50% pretty much. We went to the next target. It's messy. I don't know, that doesn't really line up very well, I guess, but I don't know, that looks horrible to me. If you draw from that top since we gapped up, that looks a little better. I'm really just mapping out the probabilities here. Stopped up here, and then you have this extension. This is where I was calling for a bottom today, regardless of how I was counting this. We were really oversold, and I saw this. I called for a bottom around here. I believe we're at like 406 range, and I drew that out and I was like, oh, we could maybe bottom here. That's what we did. We had a massive bounce off of that level. So this, we have to, I guess, keep all possibilities here. So maybe this is a 5-wave count, but if you want this to look more symmetrical, it would have to be like that down to 391. So it's really up to the Fed meeting tomorrow. Like I've been saying, I think we're due for a massive bounce here. So this is where we're gonna, I put down, we're gonna compare this to the January drop. So if this is an ABC, I was like, my previous video I mentioned that I think we would hang around this level because we're just oversold and everything, and like this looks symmetrical to me, and really interesting. We closed above that level. We went underneath it, but by the end of the day we closed above it. So you go into the 1 day and you have that close above that level. So like I've been saying, it's a tricky area. Just a lot of things throwing everything off. So referring to that January drop, I'm gonna go back in. What happened during January was we went, I'll just put them both down at the same time. So something like this, which they don't exactly look similar, but I'll show you what I am talking about. So right here, we went underneath this 2.618, and we stopped like halfway in between. We bounced and then went to that next level. So yeah, it looks really off, but if you put that level back on, take this off, right now we stopped halfway in between the 2.618 and the 3.618, just like what happened in January. And I'm pretty sure there was a Federal Reserve meeting on this day. I'll have to check and see if I'm right about that, but I'm pretty sure there was a Federal Reserve meeting on that day. And here we are, same, looks pretty similar to me. You know, we stopped in between that 2.618, 3.618, and we had a huge bounce. So maybe that is what's happening right now. I wouldn't be surprised, because I've really been stressing that whichever direction we go into FOMC, we would go the opposite out of FOMC. So I don't see much more downside if I'm being honest. These past few videos I've been stressing the more we drop to these like lower levels, the higher probability would gonna be getting that bounce soon. So unless we really crash, I mean, this is a pretty nasty drop, but I was saying in my last video how the Nasdaq made a new low and that SPY would make a new low, and we did it somewhat sooner than I thought. I really didn't have any expectations for today. Yeah, I didn't really want to try to predict today because I knew it'd be pretty crazy right before FOMC. So yeah, there was a lot of stuff to throw people off, like what we had today, which was sell off and then 405 area hit and just bang, we shot up really hard. That was also because looking at the negative gamma that was maxed out, it was at its peak, and then this was just all that gamma unraveling and kind of returning back to its mean reversion. So yeah, maybe this is the bottom. We really start making some huge moves to the upside soon. It's tough to say. You have these gaps here. This was another thing I spotted today. We had, I believe on the daily, we had a gap at 407. Where is it? Let me find it. 407. 30-minute maybe. There's a gap at 407, which got filled today. So, yeah, I don't know why I can't see it. Whatever. There's a gap at 407 that got filled today. I just have to make sure it's on here. 407. Even farther back. 407 gap. Man, it doesn't want to show itself. Okay, well, there's a gap at 407 that got filled today. We went a little under to 405. Psychological level, we bounced hard. And, yeah, so if you remember in my last video, I was talking about this pitchfork. I was aiming for these levels around here, and we bounced pretty well from right there. And we bounced right back up above, these levels that we were resting on Friday. So, I mean, to me it looks like it's setting up for a nice bounce. We hit these big levels, close to above some important levels. Yeah, a lot of, I'm just seeing a lot of strength, so you still have that gap at 400. I just don't think it's ready to go there yet. You have a gap just below it at 398, 397. What I'm thinking is we get a bounce before we go down there. So we got close, but we still have gaps to fill. This is one thing I think is stopping us from going lower right now. You have a gap at 426. You have a gap at 438. And yes, we can still go that high. Just, annihilate anyone with puts shorting this. So you have these gaps here that can still get filled, and that X wave I've been looking for. X, Y, fill those gaps. That'd be a nasty drop for it to look. That would be painful. It's pretty far away, but if you've seen what's happened in the past, so I guess we'll play it conservatively, play it a little safer. 438 is not out of the picture. Make sure to know that it's not out of the picture. It's just pretty far away, and it's better to play, a little more conservative. So, if this is the bottom, it seems likely we get to 427. You have a fib level and you have a gap here. And after that, if we top out around there, we'd go to 392. You'd fill these gaps, but that still doesn't look symmetrical. So 370 maybe. That's a rough drop. 370. That would be pretty painful, but you gotta keep it in the picture, I guess. Yeah, FOMC tomorrow. That's gonna be a big driver. You have the 10-year yield, which hit 3% today, which I've been watching for a few weeks. We hit 3% today, and we stayed underneath it, but we hit it. And yeah, we don't want that staying over 3%. That's really, really bad. So hopefully this Fed meeting can, push that yield down a little lower for a little bit. But yeah, I think we're due for a bounce soon. The odds are pointing to it. You had the VIX, which I also pointed out yesterday, in my last video. We were at that kind of a big level around here. We went through it, but we worked through it, and we came down. That also, that just signals, there's just that correlation with the VIX. When it goes up, SPY goes down, and we didn't get above that level, so maybe VIX cools off for a bit, and SPY goes up for a little bit. But it seems we're due for a bounce. We bounce from those big levels, and I've been saying it's really hard to give those targets. I've been giving like kind of ranges lately. I wasn't able to say where we would bottom, because that was it's just a tricky area. It doesn't seem like it wants to go to those next targets like it did in January. That's really what I'm comparing it to, January. It's hard to say. But we need a bounce soon, or else we're just gonna have that parabolic drop. And I'm looking at anything from 390 to 370. So there's a long ways we can drop. I mean, you can even see with this too. Get a bounce, and there's a lot of trend lines we have to test. This line's up too. Maybe we hit this and then we get rejected off of it. But we'll have to see. Tomorrow's going to be really interesting. A lot of volatility for sure. So, that's going to be it for this video. Things to watch are going to be, I'll just put it back up quick. Things to watch are going to be that bottom trend line right here. We closed, got rejected off of it today. You're just going to want to watch to see if we get back above that level, maybe get above 420 again. I'm really eyeing 427. That 427 gap looks like it wants to get filled before going any lower. So 427 I think is the biggest level to watch here. Pretty high probability we go there, I think. Assuming we've made a bottom, kind of had that fake move down to the next target like we did in January, and I think I pointed this out in the beginning of the video, but after we did that fake out, we bounced and then we went to that next target. So maybe we bounce, and then we go to that third target, which is 398. There's two gaps right here. Just like in January, you bounce from in between, go back up, and then after you go lower. So tricky spot, but chances are we bounce on FOMC. We've been pricing it in the past few days. We already know what's coming. Half a percentage point. I think any higher than that, we may go red, but we're expecting that 50 point rate hike. So we already know what's coming. If they announce that, I don't know why we would go lower if we already know what's coming. So that's gonna be it for this video. Hope you watch through the whole thing. Make sure to drop a like. I really want to get this channel. I really want to grow this thing. Make sure people can learn from me. I have those tutorial videos coming up. So the only way I can get this channel to grow is if you guys support it, subscribe, and like the videos. Personally, I think I'm a pretty solid trader. I have a lot to offer. So the more people that see this stuff, Yeah, I just love watching people make money, grow, get better at this stuff, have that financial freedom. So help me grow this channel. I'd appreciate it. And yeah, that's going to be it for this video. Peace out, guys.